only mode.
Hello, everyone, and welcome to our training today. So today we're going to talk about the funding blueprint. We're going to talk about exactly how you can get $150,000 in unsecured, no-doc credit lines for your business, even as a startup, even when banks won't approve you for other kind of financing. And we're going to talk about some other financing that's available beyond this program, as well as talk about a little bit about getting even more than $150,000 by adding corporate credit to this formula. So we have a lot to go over today, but to tell you an idea of what we are going to cover, we are going to cover how to beat the banks and become fundable. We're going to talk about the number one reason that people are denied for funding, the simple things you could change and modify to actually turn that around and be able to get approved. We're going to talk about why banks deny applications and the actual secret formula to get approved, what it takes to get automated approvals through their systems so you don't have to be pushed for manual reviews, which typically result in the majority of denials. How to get 150,000 plus in credit lines as a startup with little known about program called the Credit Line Hybrid. And this is one of the most popular programs that we're seeing right now with everything that's going on in the world and so many people standing in line for SBA loans. We're talking about how to access loans and credit lines even when you can't get approved typically with the bank. We're going to talk about how to get money as a startup, as a nonprofit, or to grow and expand your business, even if, again, you don't qualify for other funding programs. We're also going to talk about 25 other kind of funding programs briefly that you can qualify for outside of this program and how to add plus to the $150,000 by adding corporate credit as well. Now, I do have some bonuses if you're staying to the end of the webinar. First, we're going to give you a playback of this event. I'm going to teach you how to get it. I'm going to have about over 2,000 people that are going to be here for the webinar, and we're also on YouTube Live. So if you're on YouTube Live at the end, I'm going to teach you everybody how to get a playback of the event. I'm going to teach you how to get 30 days of free business credit monitoring with Experian, 30 days of free business credit monitoring with Dun & Bradstreet, and a no-cost consultation to see how your fundability stands up, to do a free check with the reporting agencies, and to give you even more information about building your actual business credit. So hopefully this gives you a quick overview of all of the things that we'll be diving into today and discussing. So let me tell you about what our beliefs are here as a company. See, at Credit Suite, we believe all entrepreneurs should be able to obtain the capital. We think you should be able to get the money you need, and you should know exactly what it takes to get approved before applying. I don't think it makes sense for you to apply for a credit card or loan and not know exactly what's needed to get approved for that credit card and loan. Let's be honest. It saves you a lot of time if you're only applying for what you can get, and it saves the lender and credit issuer a lot of time if they are only seeing applications for people that qualify. We think that you should know what lenders know about you. There's a lot of information they're obtaining behind your back that you don't know about, that they're making decisions about your approval or denial as a result of that data. We're going to talk about where they're getting it, how they're using it, and how you can beat that system. We think you should be able to access all funding in one place so you can get the majority of money that you qualify for your business. And we also really believe that you should have access to the same business credit building blueprint that the large companies use, and you should be able to get the money you need when you need it. Let's be honest, there's not much more time than we desperately need money right now from what we've seen in the current economic climate. And you should also be able to get the most money at the best terms. And there's a lot of reasons you're not getting approved for as much money as you should be. Even if you are getting approved, you're not getting as much for as you should be, and you're not getting it for as good a terms as you could get. And even though a lot of people complain about this, a lot of people don't know why they're getting the terms they're getting and being restricted the money they'd like to get. So we're going to talk about all this as well. So, are you in the right place? Well, if you're looking to get money for your business, that's exactly what we're going to be talking about today. If you've been denied financing or think there's a possibility you're going to get denied when you apply, we're going to talk about how to beat that as well. We're going to dive in and talk about the easiest and fastest way to get capital. So if that's what you're looking for, that's one of the topics we're going to be covering. We're also going to talk about how you can use your business to fund itself, how your business could be the factor that gets you funding and nothing else beyond that. And we're also going to talk about how you can get the blueprint to get business credit and corporate credit. There's actually a difference. We're going to talk about that, and we're going to talk about how you can get money at the best terms. So if you're looking to get the most amount of money you can right now with the lowest payments, this is primarily the main thing that we are going to be discussing today. For those that don't know me, my name's Ty Crandall. I'm CEO at Credit Suite. This is what we do. We help business owners get capital. We do it by improving your fundability, by building your business credit, and by helping you access financing. And I've written two of the best-selling books on consumer and commercial credit, and you'll see me everywhere from Inc., Entrepreneur, Forbes, and many other places talking about these topics that we talk about today, just so you know that I'm qualified to have this discussion. As a company, we've helped over 40,000 business owners obtain capital. Okay, most entrepreneurial companies company in 2018 by Entrepreneur Magazine. 1,091, so one of the fastest 1,000 growing companies in the country with Inc. last year. A+ rated with the BBB. Hundreds of testimonials you'll find online, real results. We're contributors for Entrepreneur Magazine, as well as you'll see me featured on hundreds of radio shows, TVs, and podcasts. I only tell you all this because I just want you to know that I have the knowledge and experience to talk about the things that we're going to be diving into today. This isn't theory. This is actually exactly what's worked for over 40,000 of our clients over the last few years. But let's talk about the problem. Look, getting money is hard. More than half of businesses are going to fail in 5 years or less, and 82% of them are failing because they have lack of access to cash flow. They need money and they can't get it. And a staggering 90% agree that availability of loans is a problem. And this is even before the current recession that we're looking at right now. So again, it's staggering. In a normal, good environment, we see that 9 out of 10 business owners are struggling to get the money that they need, and more than half of them, that keeps them up at night. So I tell you this because if these are your concerns, if these are your problems, you are sharing the same frustration that a lot of us entrepreneurs have of just really struggling to get the money that we actually need when we need it. So why are people failing to get capital? Well, it's because most don't even know where to apply. Since the rise of fintech in the early 2000s, what's happened is so many online sources have popped up that specialize in certain kind of funding that it's really hard to recognize where you even need to go to get money. And then when you do know that, most don't know how to apply. There's a process that's sometimes better than the other process of applying. There's a difference between faxing an application and applying online and applying by phone. All of them have different outcomes. A lot of people don't even realize that if you're denied a credit card, a lot of them are denied. And the best bet is to call them and the process to go through to actually get that approved. So a lot of people just don't know the process to really be able to apply to have the best chance of getting approved. And we're seeing this with SBA loans right now, right? A lot of people are in a holding pattern for SBA loans because they didn't know how to apply. A lot were stuck on even where to apply. Most don't know the right funding program to apply for. That's what's confusing. This used to be pretty simple for you and I. We go and apply at our bank for an SBA loan. But since the rise of fintech, there's revenue lending, there's cash flow financing, there's asset-based financing, there's credit-based financing. I'm going to show you over 30 different kinds of funding today, and if you don't know which one works better for you, then this is why most business owners aren't succeeding with getting the money they need. A lot of people don't know that there's all this criteria that lenders and credit issuers look at to determine approval or denial, and if you don't get these things in check, then you're not going to actually be able to get approved. And a lot of people fail because you don't know the things that we're about to learn in this webinar. You just don't know this information unless it's actually taught to you, and it's not taught in colleges, it's not taught in high schools, it's not taught in business schools. And this is why we're going to be diving into all this to decode all this and change your failure to success. So look, there are 2 steps to get the money you need when you need it, even when banks say heck no, especially using these programs to be able to get approved for the most amount of money. And the very first step is you've got to improve your fundability. So look, you've more than likely applied for a credit card before, and one of 2 things happen. You either applied and got an automated approval immediately, came within seconds, or you got that dreaded message that you'll hear by mail in 7 to 10 days. And if you're like me and almost everybody else on the call, when you got that mail piece, it was usually not an approval. It was almost always a denial. So lenders and credit issuers do this because they have a secret, unpublished set of standards that you must meet to get approved. They have criteria that you must meet. They plug it into a computer. If the computer sees you meet these things, then you get approved. If it says that you don't, then they trigger it for a manual review, which almost always results in a decline. So this all comes down to fundability. How fundable your business is going to determine if you get approved or denied. And this is a huge misconception. A lot of business owners think they get denied because they don't have enough revenue. They think they get denied because their credit's not good enough. But these aren't factors. The majority of applications are denied before your revenue and credit are even looked at. They're denied for really basic, simple things that you could change to actually turn around and get approved. And I'm not only going to run through what these things are, but I'm also going to give you examples and case studies of people that went from getting denied to getting 6 figures in approvals just by fixing very basic things. So let me give you an idea in our world. This is a real example of what this did for Credit Suite. So loan A is the first loan that we ever obtained as a company, called Revenue Lending Loan, $70,000 loan amount. We got it over a 3-year term, a rate of 10%, and a monthly payment of $9,600. By the way, If you know anything about cash advances and anything about revenue lending, you know how low of a rate 10% is. Most people that get this kind of financing are paying 25 to 50% interest. We had the connection with the lender and got in at the cheapest rate I've ever seen at 10%. So that's very cheap for that program. But our payment was $9,600. Then we got our fundability in line. We fixed the same things that we're talking about today that actually create this issue. And as a result of that, we were able to come in and get Loan B. And Loan B, you can see, was an SBA loan. It's $325,000 loan amount. Term of 120 months, rate of 8.25, and you can see how low our payment was. Now, do me a favor real quick. If you're on the webinar, I've got about 3 people that have said that they're no sound, and I don't see numbers declining, so I see numbers increasing pretty rapidly. So just give me a quick yes if you can hear my sound and you're on the actual webinar now, if you don't mind. Okay, cool. Okay, no, okay. Everybody, you can stop. There's a lot of yeses. There was a lot of people that said no, so I want to verify. So you see what I'm saying here? We got $250,000 more in funding with a payment $5,000 lower. So how is this possible? So this is what I talk to. I talk to a lot of entrepreneurs that say, hey, I got approved. I got approved for a credit card. I got approved for a credit line. I got approved for a loan. But the question is, did you get the rate and the right term to be able to get the most amount of money? And nobody understands the answer to that. Well, here's the difference. The difference is we got a much longer term. Our interest rate was a little lower, but our term was a lot better. And as a result of that, we were able to get a lot more money with a lot lower payment. So what happens here? What's the difference? The difference is fundability. And I'm going to give you real examples of what we changed to turn around and get this. And I'm going to give you fundability problems that created issues where we almost couldn't get the SBA loan. And we had to fix the same stuff I'm telling you today. So we were able to come in and get approval B versus approval A. Okay, and we did all kinds of things with loan B, which is why I want to teach you how to get it. So you've got to make sure your business is set up where it's fundable. And here's the type of things that you need to really look into and address. First of all, you have to make sure that you have the right type of entity. You see, lenders and credit issuers look at businesses that are LLCs or businesses that actually are corporations or partnerships more favorably than ones that are sole proprietors. If you are a sole proprietor, you have a lot of uphill battles to fight, but one of the uphill battles you have to fight is getting money. So my advice is, if you're a sole proprietor, you really want to consider changing your entity type. Choose a corporation, choose a partnership, have an LLC, but any of those give you a better chance of approval. Type of phone number you have. You need to have a business phone. It needs to be toll free. It needs to be reported with 411. 411 is one of the best kept secrets in lending, because what happens is a lot of people come in and they don't have their phone number listed with 411 when they set up their business. And then 411 organically picks up your phone number because you listed on Google, or you listed on Bing, or you listed in these other places. So lenders and credit issuers have gotten very used to the fact that a legitimate, credible business is one that has a toll-free number that's listed with 411. So these are basic checks that you must meet to get approved. If they ask for a fax number, you should have a fax number. If your phone number is listed with certain directories like 411, huge chance of getting approved. You need to have a business address, a virtual address if you don't have a physical location. Never use a PO box. Never use a UPS address. Stay away from home addresses as well. You could use a home address, but there's a lot of sources that won't approve you. Let me give you a real example. Amazon will approve you for a corporate credit card with a home address. Walmart will not approve you for a corporate credit card. So it just goes to show you, you can get some money if you violate these fundability criteria, but you won't get max money because other sources won't approve you when only some will. Okay, types of licensing you have. There are vendors like Granger who will give you a $2,500 credit line for your business just because you have a business license. The fact that you have a license for your business, whether it be a county, an industry, a city, when you're issued a license, that immediately qualifies you for a $2,500 credit line with Granger just because you have a license. The congruency of your records, making sure that all the stuff I listed, Yelp, Bing, Yahoo, Facebook, Google, your website, all of these have the exact same information. Believe it or not, you know the number one reason applications are denied? This is mind-blowing. The number one reason that applications are denied for loans is because the information you enter on your application does not match exactly what they find with the Secretary of State. Boom. mind-blowing. You go set up your entity at the Secretary of State. If you're like me and almost all other entrepreneurs, you walk away and don't think about it. And then what happens is your address changes, your phone number changes, you change the spelling of your name or start using ink everywhere or stop using ink everywhere. And then what happens is then you go to apply. And what happens is the lender automatically, their computers automatically cross-check your applications against Secretary of State, and they can't find your business because the business name, an address and phone number and EIN don't match what they find with the Secretary of State. There's a discrepancy there. So because that discrepancy happens, it's thrown back as a red flag and it's treated as a fraud file. They think it's fraud because what kind of business owner would submit information on an application that doesn't even match the Secretary of State? So again, this is one of the biggest reasons, this is the number one reason that information gets denied, incongruency of information. Type of references you have. Sometimes they want bank references, they want trade references, whether you have a bank account, when you set it up, having a professional website, professional email address, getting an EIN number, which gives you credibility. You can have a business without it, but it gives you credibility. A DUNS number with Dun & Bradstreet, a BIN number with Experian. These are just some of the actual factors that tie into your fundability. Now, there's actually over 125 factors that we found. So when we're actually looking at an applicant to determine and help them get credit and financing, we start looking at these 125 fundability factors to see if things like you see here, their LexisNexis and Check Systems credit report are in line. Most people don't even know they have a LexisNexis credit report or what it is. Most people don't even know they have a credit profile and a score that looks just to how they manage their bank history with Check Systems. So these are just two of 125 factors that we find tie into fundability. Now, listen, a lot of people here have questions on my webinar. A lot of people have questions on YouTube. That's okay. I promise you, I'm going to get to your questions, but I'm going to get to them at the end because there's a lot of the questions you have, I'll answer throughout this anyways. And as a result, I want to make sure that I get to everybody's questions, but I don't want to hold up what looks like it's going to be over 2,000 people to get answers to questions that they might not have. So I will get your questions answered, but we're actually going to get that done as soon as we reach the end of the actual training. So even the slightest change to one fundability standard can turn a denial into an approval. And here is one of my clients, the samples. Now what's interesting about them, they started a business with a old pickup truck and a flat screen TV. They sold them, they got together the money, they started their business. They put the money into a marketing campaign. The marketing campaign was a ripoff. It was not legitimate. So what happened was their money was stolen and they were left trying to figure out what to do. Try to get a bank loan, try to get a credit card, got denied, came to Credit Suite. We immediately jumped in to try to help them. Again, they were culprits of the number one thing I tell you that gets over 90% of our clients denied. 90% of them denied because they didn't have their Secretary of State stuff in order. We fixed their Secretary of State to get in line with their application. They then went in, they got a no-limit credit card with American Express. They got a $100,000 loan, same loan they were just previously denied for, and they so far built over $500,000 in corporate credit, not including loans, because they changed one fundability factor. They made sure that their application matched their Secretary of State records. So you've got to improve your fundability, because if you don't, your application is going to get denied. And you have to keep in mind, the number one reason that they're denying applications is because of fraud. Remember I told you that the biggest reason the applications were denied because your business information didn't match Secretary of State to your application? The reason is that when that happens, they think it's fraud. So what they're doing is they're trying to take the information you're giving them, they're comparing them to what's on your LexisNexis credit report, your Dun & Bradstreet credit report, your Experian business credit report, the Small Business Financial Exchange, Equifax, your Check Systems credit report, and the result of that is they're denying you because, again, the problem is that the information in these other places doesn't match your application. So let me give you a real-world example. The Small Business Financial Exchange is owned by lenders. It is a third-party data aggregator owned by banks where they openly share information about you. Let me give you an example. You go to a Bank of America and you apply for a credit card, let's say, or a loan. Then you apply for Wells Fargo for a loan or a credit card. What you don't know is that Wells Fargo and Bank of America, through the SBFE, openly share your information with each other. So everything you put on that application for Wells Fargo is actually being seen by Bank of America. Now, the very few people know about this, know how it happens, know the platform it's happening with, the SBFE. So when you put information on Wells Fargo saying your revenue is $300,000 a year, and then you go to Bank of America and say it's $275,000, that discrepancy throws up a red flag. flag. These red flags then have the lender concerned because they see that it's potential fraud. They then red flag the file as a fraud file and push it to somebody for a manual review. Now imagine being that person. That person's entire job is to look at files that are believed to be fraud and then tell the lender, yeah, this one's okay. So you can imagine the actual liability that person has by saying a file is okay and then it ends up being really fraud, especially when it was served up to them as a fraud file to begin with. So this is what's happening is all this information, Dun & Bradstreet pulls information from Yelp, your website, Facebook. They congregate all this data. Then they're comparing what you're putting on applications to this. Now what's interesting about this is LexisNexis. And let me give you two real examples. When we went to get approved for our LexisNexis loan, what happened was that I actually was asked to collateralize my home, which made no sense because the business has collateral. They ended up saying the reason was because I had judgments on my credit report with LexisNexis. They weren't on my Experian, Equifax, or TransUnion. I didn't even know what they were talking about. But they pulled my LexisNexis credit report. I pulled my LexisNexis credit report. 400 pages. 400 pages is your LexisNexis credit report. And what I found on it was all kinds of stuff that was inaccurate. So I proved to the lender it was inaccurate. They waived the stipulation, and I had the stuff fixed on LexisNexis. The minute that was fixed, I was able to get bank accounts easier, merchant accounts easier, financing become easier. Once I came in and corrected that information, the whole world opened up to me for funding. So since then, we've partnered with LexisNexis, and we're creating an interface to take their data that lenders have and bring it to you. We call it our Fundability score. It'll be out later this year. And this will actually let you see these discrepancies and fix them. But that's what happens. And so in this LexisNexis, and the same thing happened, I told you I'd give you a second example, but the same thing happened when it came to criminal history. They asked me if I'd ever been violated of misdemeanors before felonies. Of course I said no, because I'm a pretty straight shooter. But little did I remember that back in my Air Force days in the 90s, I actually got into some trouble and got like a speeding ticket, I think for reckless driving or something crazy like that, like popping a wheelie on a motorcycle. And that showed up on my police report years and years ago. I mean, it was like 20 something years ago. But that issue caused me to almost not get the SBA loan. So your LexisNexis credit report has every email address you've ever owned, every phone number you've ever had, every address you've ever lived in, the actual notes of your loan, how much interest rates you have, the title companies you use to close it, how big your house is, what homeowners association you have, the air conditioning units you use, the building materials of your home, every criminal record you've ever had, every license that you've ever had, and your entire life is in your LexisNexis credit report. Insurance agents, law enforcement officers, suppliers, lenders, credit issuers, anybody can get this data. So what's happening is all this data is being thrown around behind the scenes. It's all being compared to your application. And when your application doesn't coincide with all that data, they think it's fraud, and it's the number one reason deals get denied. This is why stuff gets denied. This is why the number one thing you need to be concerned with is fundability, because if you just fixed this and went back to the places you applied with before, you'd be blown away at how many denials turn into approvals. Okay, so remember there's over 125 of these fundability factors. Okay, but how much money has that already cost you? How many loans and credit lines have you been denied and didn't know? How many interest rates have you paid higher than you should? How much less money did you get than you should have got? Okay, how many higher rates and payments? Okay, do you pay now on credit cards, loans, and credit lines because you had fundability issues? Well, if we can help you with this, we do a free fundability assessment. And what we do on our fundability assessment is we do searches with the Secretary of State and other places lenders look at to see how fundable your business is. It doesn't cost you anything. We do a free check. We see how fundable your business is. We tell you discrepancies so you have a heads up of some things to change before you even apply. And by the way, on that exact same call, we also do a free search with Experian, Equifax, and Dun & Bradstreet to even see if they know your business exists. Because Experian and Equifax Commercial will give you a failing credit score even if you have no credit, if they know your business exists. So we even do that check for you as well. We do a check with the reporting agencies to even see if they know you exist, so you know if it makes sense to pull your credit reports to see if there's potential issues, as well as tell you all the funding you can get, talk to you about building business credit, everything else. So if you want to see how fundable your business is or how potentially much this has cost you, just email us info@creditsuite.com or give us a ring at 877-600-2487 and we'll be able to come through and help you. And I'll put that on the bottom of our slides as well. So fundability is the key to getting the money you need when you need it at the best terms. But let's say we get the fundability in line. Well, how do we get approved for the best financing? Well, that's step 2. Well, credit lines are one of the best types of financing because they're flexible. You don't have to pay payments on what you're not using. Okay, you can reuse them. If you use them and you pay them off, you can reuse them. Okay, beyond that, you only make payments on what you're actually using, and you can use the line of credit. You can take cash out as you need it. It's fantastic. The difference between credit cards and credit lines is credit cards you can get 0% interest rates, but credit lines you could take cash out. You could write a check against that line. You could take cash out against that line. So because of that, these are the best and most popular type of financing that business owners apply for. But most credit lines come from major banks, and those banks require extensive documentation for approval because they're full doc lines of credit. If you go to your bank and apply for a credit line, then they are going to put you in for what is called an SBA, a CAP line. CAP lines is SBA's term as their umbrella program for all their credit lines. Meaning, if you go to your bank to apply for a credit line, you're applying for an SBA loan, whether you know it or not. So the problem there is you have to be able to qualify with SBA and you have to qualify with your bank. And right now, if you're trying to do anything with SBA, of course, good luck. Okay, so for fast and easy financing, you want access to no doc financing. That's really the key. So if you want to get out of this whole rhetoric that limits how much you get and makes the approval process difficult, then what you really want to find aren't credit lines. You want no doc credit lines. Because the minute you go full doc, not only are the rates not much better at all, but you also have to go through months of an underwriting process and supply tons of documentation that you don't have to supply with no doc credit lines. So getting low rates is essential to keeping payments low. The closer to 0% you can get, the better. And it's especially true if you're a startup, obviously, because you really need to keep payments low in the beginning when you're trying to build up enough momentum to get the money you need to pay off that credit. Well, this is what our credit line program is. So our credit line program gets you access to credit lines to grow your business. Now, these are no docs, so you don't need to supply bank statements or tax returns. So, here's why this is important. Let's say that this COVID-19 crisis has reduced your revenue. Well, the number one kind of lending that's been available in the world is called revenue lending. And the problem you have is if your revenue is reduced, none of the revenue lenders will touch you. But the beautiful thing here is with Credit Line Hybrid, you don't need to supply bank statements or tax returns. So even if your revenue is non-existent as a startup or declining, you can still get financing because it's no doc financing. The best part is you can get 0% interest rates for up to 18 months. So what this means is it means that you're actually able to come in and keep your payments ridiculously low for as much as a year and a half when you desperately need it. Okay, this is a hybrid program, and this is why I call it Credit Line Hybrid, because the best part of a credit card is you get 0% financing. The best part of a credit line, you could take cash out. Remember, if I have a credit card and I take cash out on that credit card, I'm going to pay a 20% plus APR. We all know that. We're all conditioned. You don't take cash out of credit cards. It's super expensive. Okay, but if you use this program, not only do you get 0% rates, but you can take cash out at 0%. That doesn't exist for a normal credit line. It doesn't exist for a credit card. It's the best of both worlds. 0% on the credit card that you get is the hugest benefit to keep your payment low, or the huge benefit you get to keep your payment low. And on an actual credit line, you get cash out. With this program, you get both, which is why I refer to it as Credit Line Hybrid. So how much money can you get? Well, you get 5 to 8 times whatever your current credit limit is now. So if I look at your credit report, and I exclude any kind of authorized user accounts, I'm only looking at a guarantor. We'll talk about guarantors. We'll talk about the applicant's credit report. And I find out whatever my highest credit card is, not with Nordstrom, I mean with like Visa or MasterCard, not a store credit card, my highest Visa, MasterCard, Amex, what I call cash credit. Whatever that highest limit you have is, you can get about 5 to 8 times that amount of money. So let me say, for example, that the highest credit limit I have is $20,000. Well, then I'm going to get 5 to 8 times that, which is between $100,000 and $150,000 in financing. That's how I can determine how much money I'm going to get. Now, you're getting approved for multiple credit lines, not just one. So instead of getting all your money in a bit from one source, you're getting multiple credit lines. And the benefit of this is that, well, think of it like this. If you apply for a credit card, you typically, in most cases as a consumer, get a limit a little bit higher than whatever your other limits are for a reason. Because I don't know about you, and I would imagine you're the same as me on this, I carry with me the highest limit credit card that I have. My highest limit business credit card, my highest limit personal credit card, those are what goes in my pocket and I carry with me. Most people are the same. So credit issuers know this, and they always want to be a little bit higher on their approval than everybody else. If the highest limit you have on your credit report is $10,000, well, they want to give you $10,500 or $11,000 or $12,000, and you know what I'm saying. You've applied for a credit card before, and you've seen your other approvals are pretty close to what your previous approvals are, but a little bit higher. Well, they're a little bit higher because they know that you're going to use the highest limit account you have in your wallet. So when you have multiple credit lines, let's say I have 5 credit lines, and I get them approved, and in 6 months I go back and I say, hey, this guy is higher limit than you are. What do you think that company does? In almost all cases, they raise the limit. I remember having this conversation with Bank of America. They got me a $50,000 credit line, and they called me and said, here it is, $50,000. I said, thank you. I really appreciate your time and effort. I'm going to pass. I said, why are you going to pass? I said, because I already have a $100,000 credit line with Wells Fargo, so this doesn't really help me at all. And they said, well, how much do you want? And I said, I want higher than Wells Fargo. I want 110. They said, approved. They immediately approved me for $110,000 when I had 50 before, because they knew that they wanted to compete against Wells Fargo for my business. Same thing happened with American Express. The most recent American Express card we got approved for. I immediately turned around and said, I'd like to increase our limit. This limit isn't going to work. Will you need to cancel this and use another card? How much do you want your limit to be? I want it to be another $50,000 higher. They immediately approved it. Those are 2 cases that my approvals more than doubled just because I let them know that I was going to use a competitor's credit line instead of theirs. So this is the benefit of creating this competition, is your limits will continue to get higher and higher and higher and higher. And I recommend every 3 to 6 months you ask for limit increases, especially if there's no increase to your credit, and you use your other lines you have as leverage, because that's what will get you more and more and more money. Now, you can also get approved as a startup. You can get approved as a high-risk industry. You can get approved when banks won't touch you for any number of different reasons. You don't need any cash flow verification or income verification. You don't need to supply any collateral or any assets to offset the risk. It's 100% unsecured, 100% no cash flow requirements, 100% no doc, and as a result of that, you're able to get approved even if you're not able to get approved in other industries that are high risk or startup. So many accounts report to the business credit reporting agency. So of these credit lines you get, many of them report to the business credit reporting agencies. So you're getting the money you need and you're building your business credit as well at exactly the same time. As a matter of fact, when we talk about business credit building, you'll see that I'm the most credible person out there that talks about business credit building. For years, this is all I've talked about. I really want to help business owners build business credit. And when it comes to that, one of the biggest shortcuts you can use is getting this program, because it helps you add high limit credit lines to your business credit reports right away. And that helps you get a lot of future additional credit lines as a result. So do you want to continue to provide personal guarantees for your business? Well, by building your business credit, you're improving fundability and build a foundation to get away from personal guarantees. So if you don't want to continue to, this program does have personal guarantee requirements. Everything will until you build business credit. But this helps you build business credit, which helps open up the door for more corporate credit without the personal guarantee and without the personal credit check. Now, I want to talk about this because you have options. And this is where sometimes people that go to apply for this program get frustrated. I want to make sure that I explain the difference. Let me see if I actually go over this between standard cards and not. Okay, so let me see. All right, so let me go back and tell you the difference here. So there's 2 kinds of accounts you're going to get approved for. When you go to get approved, you're going to get 2 tentative approvals, and it happens same day. You get pre-approved same day. They're going to come in, they're going to say option 1, business cards. Business cards mean they report to the business credit reporting agencies. Option 2, max funding. Max funding includes standard cards. If business cards report to the business reporting agencies, where do you think standard cards report? To the consumer reporting agencies. So you have a choice. If you only want the harder to qualify for business cards, it will reduce the amount of funding that you can get, but those cards only report to the business credit reporting agency, so every time you use them, you build business credit. Now, if you're like me, you get max funding, which means you get business cards and personal reporting cards, many of them at 0%. Now, what I tell this, I get the max I can get, and then I don't even use my personal cards unless it's emergency backup. I just use those in case I absolutely need them. I live with my business cards, and if I ever need them because COVID-19 hits and all of a sudden I need an extra $100,000 worth of credit, I have that extra $100,000 $150,000 with a standard card. So you have a choice. I want to tell you this. When you talk to the funding source, you could say, I only want business reporting cards. I don't want anything other than that. And that is what they will get you. Or you can say, I want max funding, and I understand that some of that will include standard reporting cards, and I'm okay with that because my strategy is going to be to use my business cards first and my standard cards after. But you have a choice. So sometimes, once in a while, somebody come back and go, I didn't get the business cards. I got some standard cards, and I only wanted business. You just have to stipulate what you want because, of course, in our world, we're always trying to help people get max funding. So you can use your own credit to qualify or that of a personal guarantor. And there's a lot of people that come in and have personal guarantors. So more than half of the clients that we help with this program do not have good credit. They are relying on a guarantor to help them, a family member, a friend, a potential investor, okay? So 75% of startup capital comes from these people anyway. When you look at statistics, friends, family members, investors, they are the ones that entrepreneurs 75% of the time get money from. And right now with COVID-19, we've seen guarantors step up at a whole other level because people need help more than ever, and a lot of them are relying on family members and friends to get it. So if your credit's not good to qualify for this program, well, that's okay. I'm going to show you a bunch of other funding that could work, but you also really need to consider a guarantor. And let me give you an example here. I can go to a friend and go, look, man, I need money right now. You have good credit. My credit's damaged because I've been running this business. So if I can use your credit to get this program, I can get these business reported cards. I'll only get business cards. They don't even report on your personal credit report. They'll only report on mine. I'll be able to build my own business credit, and I'll actually pay all the bills, make sure that it's covered. And as a result, I'll give you 5% equity ownership in my business, 10% equity ownership in my business. I'm not saying you have to do that, but I'm using an example of how you can rely on people in your network as guarantors and still get the money you need. And again, before you write that off, more than half of the clients we help with this program do that. They ask the people around them, and the people around them are more than willing to help if they only are committing their credit and the accounts don't report on their personal credit report, because it's way easier helping you that way than giving you a big pile of cash that they have to pull from their own investments. Now, you need to get approved based solely on your personal credit history. It's not based on revenue. It's not based on cash flow. It's based only on your personal credit history. Now, I say a 680 FICO score or higher, but don't get caught up on the FICO score. Okay, what it really comes down to is this. You need to have good personal credit. Your credit's all that's being used for approval. You can't have bankruptcies. You can't have judgments. You can't have tax liens. You shouldn't have any derogatory items at all on your credit report in the last couple of years. Your utilization needs to be low, preferably less than 40%. Really, they want to see less than 30%. You need to have less than 6 inquiries in the last 6 months on your business on your personal credit report. Now, if you don't meet the utilization and inquiry requirements, you can still get approved. You just might not get approved for as much money. So don't be disappointed if you don't get $150,000. It's probably because you didn't have these 3 things. You didn't have really good credit. Your inquiries were higher than they should be. Your utilization's higher than you should be. In these cases, it doesn't mean we just absolutely won't get you approved. It just means that the amount of money you may get approved for may be reduced. Now, you can get standard cards with about 650 to 680 credit scores. So when I say 680 plus, your minimum of all 3 of your credit bureaus really needs to be about 680, and that will get you the standard and the business cards. If you're lower than 680, down to the lowest score you have of all 3 of your credit reports being as low as 650, you could still get the standard cards. You're just not going to get the business credit reporting cards until you're 680 score or higher. Now, there's over 50 sources that offer this kind of financing. Our team can help you find the right source who will get you the most money. What we found is this. Some sources are better for different kind of credit profiles. Some sources are better for different kind of industries. Some are better for startups. So that's what our team is going to do, is help you find the right source and get you submitted over there. Now, many of the sources charge a 12% fee. The lenders that we work with, the finance sources we work with, will charge you about a 9.9% fee. And just like an SBA loan, they roll it into the actual financing. It's called a success-based fee. So you don't pay anything out of pocket up front. They don't charge you any money out of pocket that you have to pay them. Instead, what happens is they will charge you a 9.9% success fee on the end and roll it into the actual financing you get. So you get approved, your credit lines come in the mail, you use your credit lines to actually pay their fee, and you're saving about 20% on the fee than what you go with those funding sources. Because to give you an idea, I don't know, roughly, I have to look, but we funded $3 to $5 million last year alone with this product. You see what I'm saying? The funding sources that we refer you to, we send so much business to that we beat them up on their fee to get it lower, and then we don't pocket the difference. We just get you the lower rate. So we negotiate to make sure you're going to get the best rate with us because we do so much volume with them. And like I said, you're rolling in the fee to a normal SBA loan. Now people ask me, what are the interest rates after the 0% period? Same as normal credit card rates, 6 to 14%. The same as every credit card you use has about the standard interest rate. This is the same as these lines. They have the same interest rate that you're going to see on a normal credit card, which is about 6 to 14% after that 18-month period is done. And again, the fee that they are charging here, they're rolling in of 9.99. So here's an example of how to use this. This is one of my buddies, Sam. Sam owns actually 3 martial arts studios. He owns 3 karate studios. Okay, Dragon Gym is his name. They're awesome. I have all their shirts. Their shirts are super comfortable. So he had a gym. He came to me and said, we want to open another gym in a year to a year and a half. I said, why are you waiting a year to a year and a half? He said, that's how long it's going to take us to save our profit. I said, let me introduce you to this credit line hybrid program. I think it's exactly what you need. We got on the credit line hybrid. Within less than 6 months, they opened their second location. Then they used it, paid it off with the profits from their location, and got a third location. So in the same year and a half that he told me he wanted to open one, he opened up 2. Now he has 3 different martial arts gyms. And now he contacted me and said, hey, COVID-19, gym is shut down. Not only is he taking all of his services virtual, which is brilliant, but on top of that, he's also using the credit line hybrid to get himself through these couple months that his gym is shut down. So multiple examples of how we use this one program to actually be successful. Now keep in mind, you can easily get way more than the $150,000 if you start building corporate credit as well. This is credit that you're building for your EIN that's not linked to your social. What I told you so far with credit line hybrid, it's based on your personal credit or somebody else's, right? So there is a credit requirement. There is a personal guarantee. But with corporate credit, you could build it for your EIN that's not linked to your social. There is no personal credit check. There is no personal guarantee. You can obtain high limit credit accounts. You can get vendor credit and store credit at almost every major retailer and fleet credit and Visa and MasterCard as well. So if you're interested in this after you get the credit line hybrid, or you don't have good personal credit and don't have a guarantor, we can help you with all of this. None of this requires good credit. None of this requires a guarantor. None of this requires collateral. None of this requires cash flow. Okay, so all of this we can help you with as well. And if you want to learn more about either of the programs, you can either go to get approved for credit line hybrid at creditsuite.com/get funding, or just give us a ring at 877-600-2487. I know if you hit voicemail, it's okay. Just leave a message. Our team will call you back. But you can imagine when I do a webinar like this where over 2,000 people are here, you can imagine how much influx our team will get today. So just leave a message if we don't get back to you, and we will get back to you almost always same day. So how you can get other kind of funding? How do we get you other money beyond this? Well, we work with all legitimate forms of funding, and that's the most important thing you need to know, is that really when it comes down to it, the reason you typically can't get the amount of money that you really need is that the sources you work with, like your bank, only works with SBA loan. Cabbage only worked with revenue lending loans. On Deck only works with revenue lending loans. Seed Capital only works with credit-based loans, okay? We've got lenders that only work with asset-based loans. So the problem is you may qualify for 1,000 lenders, but you went to the wrong lender looking for the wrong program. So as well as us helping you with the credit line hybrid and business credit, here's a look at just some of all of the other financing that we can help you with as well. Revenue lending and merchant cash advances that are based on revenue. Account receivable financing and purchase order financing to help you get the supplies that you need and be able to get the inventory you need or purchase the inventory you need, even borrow against receivables you get from your clients. You can get the startup financing we just talked about, book of business financing if you're an insurance agent. You can use your stocks, bonds, IRAs, 401ks of you or somebody else to get money as well. You can get commercial vehicle financing, commercial real estate financing, peer-to-peer lending where private investors invest in your company without you giving up equity. Angel investing and venture capital are huge right now. A lot of people wanting to lend you money on the private side. Okay, I just looked at this through a webinar I looked at. Over $1 trillion is available right now in VC's hands that they're looking to invest in small business. Over $1 trillion. A lot of money there. Okay, private money, equity investments, inventory financing. Let's say you're an e-commerce business and you need $10,000 worth of inventory to sell on Amazon. We have a funding source that will crowd fund the inventory for you, get you the money, buy the inventory, and then you pay them back as you sell the product. Equipment financing to buy, borrow against equipment or lease equipment. SBA loans, you need help with your PPP loan right now. You need help with your EIDL disaster loan or any other kind of SBA loans. We help there. Term loans, business lines of credit, house flipper financing if you're a flipper, crowdfunding. This is what we do as a company. We work with all this funding to help you get the max amount of money. And here's one of our clients that came in to get a $417,000 to pay off a tax lien. Couldn't get approved at his bank because his score was 580, came to us with advice on shutting down his business or somebody that he wouldn't be interested in buying it, and we ended up getting him over $1.5 million through multiple programs, including the credit line hybrid, as well as also on top of that, term loans, revenue lending, private investment money, many other sources. This is the result. He opened up he doubled the size of his practice, opened up another office, and ran for political office as well. It's what happens when entrepreneurs have access to the capital they actually need to survive. Now, we have a finance officer team that will help you get financing. We determine what you can qualify for. We help you find all the best financing products. We work with lenders that you can get approved with. We negotiate the rates and terms. We use our own volume discounts to get you approved. And then we help develop a finance blueprint. If you can't get SBA loans, we help you understand what's needed and help you get to a point where you can qualify for SBA loans. We improve all aspects of your business fundability, so you never need to look for funding again. We can get you money in as little as 72 hours. The credit line hybrid gets you money in about 2.5 weeks. We work with high-risk industries, nonprofits, startups, credit issuers, any of these things we can still help you get approved. Okay, and you get all of this in one place. But here's the best part. If you're coming to us just to get money, we never charge you any money. We don't charge you application fees, or we don't charge you any of fee that we roll in on the back end. If you come to us to get credit line hybrid or any kind of loan, we will never make a dime of money from you on that program. The lenders give us referral fees. It's how we get paid. Some finance it we don't, like stocks and bonds. We don't get paid any money on that. We help our business owners because it's what makes sense to do. Economic injury disaster loans. We don't get any money on those, but we do it because it's the right thing to do. So we help you get a lot of money. We don't get paid anything. And then some sources will actually pay us a referral fee, and that's how we get paid. But again, we do volume discounts, so it doesn't cost you anything. It's still cheaper to work with us than get it on your own. Now, don't get me wrong, okay? There are a couple things to keep in mind. Okay, even though we don't charge fees, the lending source is going to charge fees. I already told you, we're going to refer you to the best source. They're going to charge a 9.9% fee. We got it reduced from 12 to 9.9 for you, but they are still going to charge you a fee. It's how lenders and credit issuers get paid. That's why we disclose that up front. But we don't charge any upfront fees. Now, the other thing to keep in mind, if you're coming to us to build business credit, well, we do have a program there that does cost money. We've got programs that do cost money. Our software that helps you build business credit, where you work one-on-one, hand-in-hand with our advisors, that takes 3 years of corporate credit building and reduces it to 6 months, where we go through our business finance suite step by step, improve your fundability, help you build business credit, help you get your business credit reports, help you get credit without a personal guarantee and credit check. We do have a program like that does cost money. It's well worth it and cheaper to work with us than do it on your own. Okay, we have another program. It's a partner program. You could offer business credit financing as a service. It's basically we put you in the business to become a business loan broker. You could sell business credit. You could sell financing. We give you all the training, all the marketing, a complete back office, the ability to hire and train salespeople, everything you need to run a business in the business credit and financing space. Those have an investment as well. So we do have programs that do have investments, but we never charge you any money to get any kind of funding. That's not how we get paid. We get paid a referral fee in some cases from the actual funding source. So if this makes sense, you can give us a ring, 877-600-2487. Go to info@creditsuite.com, or you can also go to creditsuite.com/get funding. So I promised you to be able to get this, and here's exactly how you do it. There's two options you can do to get a playback of this: to get the free business credit monitoring with D&B and Experian that I told you about, to get the consultation where you actually can meet. We do the free fundability check. We do the free check with the reporting agencies to see if you're set up. We help you get your business credit reports for free. There's two ways you could do it. You can give us a call to get it, or you can go online and schedule time at creditsuite.com/consult. Now, warning. Right now, if you're trying to schedule a consult, it may be 5 to 7 days before you can get our team on consultations. You get it. You see what's going on in the world. Okay, we're really helping a lot of people get capital right now. So as a result, just be patient with us. Okay, you might have to schedule a consultation 5 days out, 7 days out. If you don't want to do that, then just give us a ring at 877-600-2487. Leave us a voicemail, or go to creditsuite.com/get funding to just fill out a handful of questions and actually be able to get approved. So that is the formula to do way more than I promised you in the beginning. I told told you how to get $150,000 with the credit line hybrid. I also introduced you to corporate credit, a way that you could get another $250,000 beyond the $150,000. And I also gave you at least 25 programs of other ways you can get money, and gave you a simple path to access help with all of it through either scheduling a consult, giving us a phone call, or coming to creditsuite.com/get funding to get approved. So now what I'm going to do is I'm going to open this up, make sure that I can get through and answer some of the questions that I have. And if you have other questions, all you have to do is give us a ring, send us an email, go to creditsuite.com/get funding, and we'll make sure you're taken care of. Okay, I'm just going through questions right now. This says, my FICO scores are all over 700, but they're mostly AUs. You can apply for credit line hybrid with authorized users, but you need to have at least one account that's your own that has a $2,000 limit or higher. Okay, so hopefully that answers that question. Let me see here. Come down and answer a lot of webinar questions because we have a lot of people in our webinar today, so I want to make sure that that's done. Do you put the fun in fundability? Chris, I love it. Yes, we do. Then, sorry, okay, so somebody's saying they can't hear. We talked about the audio issues on that. Some people had some of those issues, but we were past that. Okay, and just trying to look through, make sure that any max funding. Okay, you have that choice. You just tell the source that you want max funding, and they'll get you both of the max funding options you have. If I commit to my credit, I want in 40% utilizations, 1%. Okay, a doctor with a credit score of 580, LOL. Anthony, yeah, Anthony. Most doctors have horrible credit, so you know that. I used to own a consumer credit company and sold it many years ago. Wrote a book on consumer credit that's the best-selling book that's out there on. I know a lot about consumer credit, and I can tell you that doctors are inherently very bad at paying their bills on time. Anybody that it's in credit repair will tell you that same thing. Chris says, it took my wife 2 weeks to get a call back, but she did get the call. Yeah, and I'm not sure what program you're applying for, but especially right now with what's going on SBA loans, that's especially true. And as a result, with the credit line hybrid, we have our funding team now handling SBA loans, Chris, because anybody dealing with SBA loans is dealing with a delay no matter where you're going. We're dealing with that same problem on our SBA loans as well. And that's why if you call our main number, you'll find out that our team will actually get with you same day, which is very different than what's going on with the SBA loans. Can I get funding to buy your partner program? You can. If you can qualify, a lot of our clients use credit line hybrid to buy our core program to build their corporate credit and to build their partner program. So that's exactly, Jesus, what a lot of our clients do. A lot of our clients, if they have good credit, we come in, we get them credit line hybrid, and then they end up coming in and getting their corporate credit built to get away from personal guarantees and credit check. And then Tamiko says, so that 9.9 is payment back to, that's not payback to us? No. The 9.99% is not paid back to us. That actually goes to the funding source. We actually only see a very, very, very small percentage of that we get paid as a referral fee. Not almost all. Of every funding program we help with, the vast majority of the money goes to the lending source that collects it, and they pay us a small referral fee is how we typically get paid. And LaQuelle says, after getting 5+ credit experiences, what is the best tier 2 credit to apply for? Amazon's really good. Office Depot is really good as well, but both of those may, with only 5 accounts, get you approved for a net 55 account, just so you know that. And Jerry says, how do you deal with business derogatories? Dispute them. We dispute business derogatories directly with Experian, Equifax, and Dun & Bradstreet. Dun & Bradstreet has a system called iUpdate you can dispute with, and Equifax and Experian do that through their credit monitoring programs. How soon can I start this no-doubt credit line hybrid? You can start it and get approval typically same day or within 24 hours, and you get funding within about 2 weeks and to 2.5 weeks. And it does apply for nonprofits, Shrosslin. Can you please explain how to get funding with a startup? As a doctor, I have a low score. Insurance companies are slow to pay me. So, Chris, this is what you want to do. First of all, think about a guarantor of some sort to get the credit line hybrid program we talked about. Build your business credit, because you can build business credit regardless of personal credit quality. The other thing I would do is you need what's called account receivable financing. AR financing helps doctors to actually get paid that money within 24 hours, so you don't wait for insurance to pay you. Account receivable financing is the #1 kind of financing used by physicians. Your businessman or your manager of your front office doesn't need to chase the money, and you'll get the money in 24 hours instead of waiting. You can call us on that. We deal with that, or or you can go through any source that offers AR or account receivable financing. Charles says, can you get business credit if you have a personal tax lien? Yes, you can get business credit if you have a personal tax lien. And since even though you didn't ask, I'm going to give you a tip. Tax liens are verified by the consumer credit bureaus because they're on your LexisNexis credit report. If you want to get a tax lien disputed and removed from your consumer credit report, then what you want to do is you want to dispute it with LexisNexis first, then dispute it with the consumer reporting agencies, and you'll typically see that item get deleted. But it will not interfere with your ability to get this program. Tomiko says, if I have a score of 730, how likely would I be to get approved? It depends on the other factors, such as inquiries and utilization, but very likely to get approved if at least one of your accounts on your credit report now has a $2,000 limit or higher. How much is your partner program? You can go to creditsuite.com and look at our pricing. I think we still have it marked down right now because of what's going on with COVID-19. We wanted to make sure that it's very affordable. So go to creditsuite.com, top right of our page. You can look at pricing. It's weird. I don't usually say that on webinars because these will be looked at for years to come and that changes all the time, but that's where you can easily locate it. William Brown, I have applied for credit before. It was denied. They stated that they used a PI score through WebBank. What's the difference to a PI score? I don't know what a PI score is, but I can tell you this, that what happens with credit polls is called credit scorecards. So every industry has its own scorecard. So for example, if you apply for a mortgage, then the mortgage broker pulls what's called a mortgage industry option scorecard that weighs your mortgage history higher than anything else. Same thing when you apply for credit cards. They're using a credit scorecard that's designed for credit cards that weighs in your history on your credit cards higher than everything else. Second thing to keep in mind is the question is are you pulling a FICO score? If you are signed up for credit monitoring, my advice is you need to ask and see if you actually are pulling a FICO score or Vantage score. A lot of people are pulling a Vantage score and don't know they are. My score is 509. What's the best chance of getting business funding? You can get funding as long as you have some kind of collateral or asset. I showed you a bunch of those that could work. If you have consistent cash flow, if not, building your business credit is your best bet, and we can help with that as well. Okay, and what do I need to do to become a part of your team? If you are interested in, just give us a call. And if you're interested, we have an affiliate program and a partner program. You can also have our team submit your information to HR if you're interested in actually physically working with us. Let me go back to YouTube because we've got some people on there. Sean, 19. My father's been teaching. Oh, we already talked about that. Aaron, can program help us get our personal credit in shape so we can qualify in the future? We don't deal with personal credit or personal credit repair, but we have a ton of really good resources that we can help you. We can refer you to companies that can help with that, Aaron. Just give us a call. We'll refer you to somebody that can help with that. And Jawan says, can you help get a Macy's business credit account? Yes, that's a corporate credit card, and we do deal a lot with Macy's, Nordstrom. We can help you get with all those as well. Devontae says, can you help get funding with a cleaning service? We absolutely do. Marlon says, do you guys remove inquiries from personal credit boards? We do not. We don't do anything with personal credit, but we can refer you to sources that do. And Tony says, I'm interested in being trained and getting business credit. We can help with that. We have a whole partner program and an affiliate program. Just give us a ring. Can you get a replay of the webinar? Yes, just email us or give us a call. If you're on the webinar right now and you stayed to the end, we'll send it to you automatically. So you don't have to. If you're on YouTube, then you need to get in touch with us because we won't send that automatically. Anita says, I have a DMV Pay score of 80. However, I do have trade lines on my poor. I will be able to get a loan. Will I be able to get a loan? It depends on how many trade lines you have. But you're not going to usually get a loan based on your business credit reports only unless you have a tremendous amount of trade lines, 15 plus. Otherwise, you're going to need to use personal credit. Now, you can get business credit cards. So you can get corporate credit cards with high limits, Anita, using your business credit to do so, and you can have your business fund itself that way. But getting loans, you're not going to get until you have considerably more credit cards. Charles says, please don't call my name on the call. Okay. I already said that. Okay. Do you know of many companies that offer grants instead of loans? No. Companies don't offer grants. Sometimes you can get them through other places. Like right now with COVID-19, Colorado has a $7,500 grant. Michigan has a $10,000 grant. New York has a $27,000 grant. You could search disaster grants in your state name and find them. And there's also a lot of ones at Grant Watch. I think Grant Watch is another place to look for grants, but there's plenty of places you can find sources of grants online. Joanne says, how much you charge to teach us this and how long is it? Well, it depends. I mean, we've got an affiliate program that's free. And then we've also got an actual full-blown partner program where we actually help you create your own business credit and financing business. And then we have different levels of that depending on if you want your own CRM and your own funnel and all that kind of stuff as well. So if you want to become an affiliate, then give us a ring, 877-600-2487, or just go to creditsuite.com/affiliate. You can become an affiliate for free. If you want to become a partner, which is very lucrative, give us a call. We'll talk to you about our partner options. Linda says, we took care of my mom for over 10 years and it cost us over $300,000 back in 2009. Bankruptcy. Ours is such a mess. Okay, if you have then if you have a low credit score, then you need to go to somebody that can help you fix credit. We can refer you to somebody there. The other thing you want to do, Linda, is you need to start immediately building your corporate credit profile, because by building a corporate credit profile and score, you can start getting money based on that instead of your consumer credit. So that could really help you a lot. Michael says, what are you charging merchants for help with the SBA disaster loans? We don't charge anybody loans for anything. Here's how we do SBA loans. So if you come in and want an SBA EIDL loan, you don't need to go through us or anybody else. You go to disasterloans.sba.gov. disasterloan.sba.gov. You can submit your own. Okay, now that being said, if you submit your own, then you need to go to your own lender for PPP. If you want us to submit to a lender for PPP, we've got some places that will work with lenders. We can refer you to lenders. We can also refer you to brokers that do charge money. Like my own personal SBA broker charges $2,000, but he works with community banks. So I paid the $2,000 to work with them, and our application, we just got an update yesterday. They wanted some more documentation. We supplied, and it's getting submitted. So again, we're already way ahead of most because we work with a community bank. So I can refer you to our banker as well. You go to creditsuite.com/PPP. Everything you need is at creditsuite.com/PPP. Best way to get a loan to start a business. This is the best loan that I've seen to start a business. And that being said, I'm going to go ahead and wrap this up. Look, a lot of you have questions, so this is what I'm going to do. I'm going to have my team reach out to those of you that had questions directly to make sure your questions are answered. I hate to jump, but at 2 o'clock, I'm supposed to go live on Facebook, and I'm surpassed 2 o'clock. So that being said, I'm going to go ahead and I am going to wrap this up. So now you know exactly how to get $150,000 in unsecured credit lines, no docs, 0% rates for 18 months. We talked about building business credit. We talked about a lot of other ways to get financing as well. If you stayed to the end of the webinar, you'll get a playback tomorrow. Okay, if you are attending on YouTube, give us a call, send us an email. We'll give you a playback of this so you can listen to it at your own pace, or you could come back to the video that you're watching now. And if you have questions that were unanswered, I'm not trying to ignore you. I just have 100 here, and I literally have a lot of people waiting for me to get on Facebook Live. So I'm going to move there, but I will forward your questions to my team and make sure that we follow up to make sure your questions are answered. So thanks, everybody, for tuning in. If there's anything else that we can help with, give us a ring. If you'd like to get a proof of credit line hybrid, if you'd like to build business credit, if you'd like to get other kind of financing as well, simply give us a ring at 877-600-2487. That's 877-600-2487. Thanks, everybody. Have a great day.